Hope you're ready for it. Welcome, welcome. My name is Alexa, Operations Manager here at the BPM RIA office. And I have here today Anish, Taryn, and Jason from DPI Fund. They're going to talk about how to invest your money in a changing market. So a couple quick announcements. We have some great events coming up, end of the month, going into June. This Thursday, we have another great webinar, Crushing the South Florida Real Estate Market, where we'll talk about some deals that our students have done. This weekend, we have our 2-day quick start training, all day, Saturday and Sunday, with Anish and our 4 amazing guest speakers that you can find on bpmquickstart.com or on our website in the upcoming events tab. You can find all of our events on the upcoming events on the website. I'll put the link in the chat for you guys. I'll be putting a bunch of helpful links in the chat for you all, so you can find where our events are, see when they are, what time, all the great information we'll be discussing in those events. We have Chief Tax Strategist Jose Ramirez coming back for a new topic. You won't want to miss it. Next week on Tuesday, our monthly meeting with Marco. This is going to be a different monthly meeting. We're going to be a little bit more interactive in this one. Cameras on, just like our quick start, which I have a poll up here. If any of you are interested, we only have a couple seats left for this one. So go ahead and respond to the poll. I'll give you a call today if you'd like more information on the BPM 2-day training. So monthly meeting, cameras on with Marco. We're getting into it, so be prepared for that one. And then we have another workshop with Florida Entrepreneur Law. Their other attorney, Michelle, is going to come on and discuss securities and real estate investments and why you should care. So that's going to be a really good set of events. We always have great events, but I'm really excited for these. Alrighty, and my absolute favorite way to keep up with our events is the text line. So if you text this line, this is for events only. So I wouldn't ask any questions on this line. I've seen some people try to call this line before. This is not a call line. This is our text updates line. This is for raffles and this is for event updates. So if you'd like to keep up with our events via text, go ahead and text BPM REIA to 954-800-6961. And you can register straight from the text for any of our events that are upcoming. And as I mentioned, our quick start is coming up right around the corner. Like I said, we have just a couple seats left. If you responded to this poll, which so many of you responded, thank you so much. I will give you a call after this webinar just to give you a couple more details and let you know what's happening these 2 days. It's 2 full days, 9 a.m. to 5 p.m. with Anish. So a lot is going to be covered here. So thank you all for responding to the poll. Alrighty, memberships. So our members do get discounts to the quick start. They get into the in-person meetings for free. They get the entire National RIA benefit package, since we are the only local chapter in South Florida that's affiliated and partnered with the National RIA. We don't take this lightly. We get a lot of great things from the National RIA. So if you're interested in benefits to Home Depot, Office Max, all these places that I shop at every single week, the savings and benefits that you get from this benefit package will most likely pay for your membership, especially if you're going to those in-person meetings for free. If you are a corporate member, you are going to get a lot more. Your logo will be featured on the website. You'll be able to rent a table at our in-person networking meetings, as long as we're in alignment. So if any of this interests you, I will put my email in the chat in just a moment. And I also put the link in the chat. So if you're wondering how to sign up for these memberships, you'll just go ahead and press the link in the chat. It's on our website, bpmria.com. There's a memberships tab and you can go ahead and sign up right away. Alrighty, and of course our mentoring and coaching programs. This is a one-on-one coaching program that we offer. It is unlike any other program. It is solely one-on-one. You will be paired with a mentor. If you are interested in getting more information, I highly recommend you book this discovery call on our website so that I can answer as many questions that I possibly can. I can give you more information, give you more insight on this amazing opportunity. We actually just had a deal close recently with one of our students for his first deal. So I'm going to put our social media links in the chat for you guys right now. So you can go follow us on Instagram and go like our photo. We're so proud of Mario. It's just amazing to see those things. And you can go follow us on Facebook, Instagram. I put a link to our private Instagram, our private Facebook group that we have for real estate investors. Be sure to answer all those questions to get into the group. And you can follow along with us and our students and see what's going on. So if you're interested in having a direct call with Anish, I'd be more than happy to help with that. If you have some questions that I can possibly answer, don't hesitate to reach out and schedule this call. I put the link in the chat for you guys. And yeah, we're excited to get you that more information if this is anything that looks good to you. So just taking a moment to thank our sponsors, thank National RIA, thank our amazing speakers that are here with us today, taking time out of their day to tell us what's going on in their world, help us, give us more information, more insight on all the great things that they're doing. So thank you guys so much for being here. And thank you guys. I'm going to let you guys take over now.
Awesome. Thank you.
Thank you.
Thank you very much. And yeah, just to follow up on that, Mario, I don't know if he's on the call, but actually Taryn was his mentor. And it's always nice when your first deal, if you could imagine, Jason, $70,000 profit on a probate deal. Wholesale.
Wow.
Yeah, about 35,000 in his pocket. So if you do run into him this week, any other students, guess who's buying the check? Don't let Mario, fool you.
Drinks on him.
Drinks on him, lunch is on him, all the above. And I already know he cashed his check, so he's good for it. So don't fall for that. So it's always exciting on that portion too. So again, as Alexa mentioned, how many of you guys are actually new to any of these webinars? I see so many familiar faces. I am also, again, my name is Anish Dave. I am the president of BPM RIA. We were formerly the Broward Real Estate Investors Association and the Miami-Dade RIA. And for those that sometimes I actually get some people asking, what the heck does BPM stand for? It's Broward, Palm Beach, Miami-Dade. We kind of just went through a rebranding phase because people kept thinking we only bought in Broward. So I was sick of it. I said, yeah, we buy in all three. So again, we're always adapting too. And, I know COVID was a big aha moment for a lot of people, including myself and my partners here. And one of the things was, everyone's always busy, right? Yeah, whether it's family, friends, business, all the, I'm too busy. When the world kind of shut down, it was time to kind of work on my own goals, ideas. And, I've been friends with Jason for 20 plus years, Taryn at least 10 plus years. I guess that makes us old. It's basically what you said. But still pretty young. So one of the things was, I was really, with separate conversations, always interested in a fund and doing some bigger things. And, Taryn was always pushing me that way. Jason's always got these creative ideas. And I'm the guy in between saying, no, wait, this is not the right time. And all of a sudden COVID happens. And so we said, hey, I know the world's shutting down. Why don't we open up a real estate hedge fund when the economy is shutting down? And what the funny part?
Open up.
Well, the funny part is, like, you look back at great industries and what they've done, and a lot of great things opened up went on an economic downturn. So that's our fund, diverse. It's DPI. You'll hear us call DPI. Diversified Passive Income Fund. So
gotta keep repeating it. Diversified passive income. Diversified passive income.
Yeah, otherwise it's gonna be too much to constantly keep saying the same things. I'm like, oh my God, that's like it'd be like a tongue twister too. So I'm just gonna kind of ask some basic questions. What do you go ahead and put in the chat? So today's really about being interactive. So one of the few things is, if you guys are investing, obviously, we are investing in real estate. What other things are you guys investing in besides real estate? Go ahead and put it in the chat. Because we're always kind of curious to hear what you're investing,
No, that's a great question regarding, what's the market changes and the stock market and everything, what's going on. We see, oh, look at this, ETFs, cryptos, stocks, norm.
Yeah. And that includes, Fernando, I'm like with you, unfortunately, stocks. So, I mean, how many people, are taking a beating in the last 6 to 8 months? Like, I don't even want to look at,
It comes every day, every time I look at the market.
Yeah, right now it hurts. Yeah, and Kevin, of course, one of our investors is one of our newer investors actually on board, also one of our newer students, Kevin. So far, so good. Wait till you get your first check soon, so you'll be happy coming out in a couple of months. So, but yeah, I'm seeing Fernando, me. Okay, that's great.
Anish, I just want to throw something out there real quick. I was speaking to a investor friend of mine, and as far as we're mentioning investments as whatever the stock market, he said, sell your stock, take the hit, deduct it off your taxes, take the money and reinvest. That was another option. Just want to throw it out there.
Yeah, and so as Jason's saying that, so you're gonna hear usually my same disclaimers, right? We are not attorneys, we are not financial advisors, and we are not accountants, right? So if you need any of those things, we do have it at BPM RIA. A lot of our corporate vendors have expertise in that. Today is just to give you an opinion of what we think and what we're doing personally. So I don't want you to think this is, financial advice. So there you go. Now I said my little, your
little disclaimer.
Disclaimer. It's recorded. I don't want to hear Anish told me I should do this.
We're not CPAs. Let's get that straight.
Yeah, and it's important to like open up the conversation so you guys can start to see what else is out there so that the right questions to ask, right? So that's the difference between being educated in this space, because a lot of people just don't even know the questions to ask, like, oh, you can invest in a debt fund, what does that look like? And it's since we started this fund, it's been very interesting, the questions that we get asked by investors. And we're always like, oh, that was very, like, I wouldn't have thought to ask that of another fund. So it's, we're not advisors, we're not CPAs, we're not lawyers. And this is all about for you to discover what's possible so that you have information to start asking the right questions to see what fits for you.
Exactly. Well said,
Tara. Yeah. So go ahead and put it in the chat. Remember, our webinars are super interactive. So we want to just kind of make sure on that portion. So how many people are actually worried about inflation? Do you think that matters? And for the basics, what inflation's, just in case you don't know or you've been hiding out, inflation causes prices to rise, including food. Maybe, I don't know, unless you guys have an electric car or a Tesla, maybe you've noticed some gas prices going up a little bit, food prices, bread, all the above. And
I think I was gonna say, I think we're at like what, 8 or 10% inflation right now.
Yep.
Across the board.
Hey, there's no baby formula. We're running out of baby formula. We're in trouble.
Yeah. So I mean, like it kind of, and we're talking about rising interest rates, right, on mortgages also, I shouldn't say just mortgages, that includes, car loans, line of credits, credit cards, it's across the board. And I don't know about you guys, right? Like, I felt like it kind of snuck up. Today, we're not going to talk about politics. So, if you guys want to talk about politics, that's not us. We could watch some TV shows, and if you want to have an off comment, I'm kidding. But the point is that inflation is a big thing, and easy terms, right? That means your money can buy you less, right? You have X amount, and how comfortable do you guys feel, leaving, if you're like my parents. I don't know about your guy. I know Jason's parents actually too. Do they have a CD, certificate of deposit?
My parents
money market, money market.
They buy the bonds and the CDs and the conservative stuff. They do. They're old.
Yeah.
They're old.
That's what old people do. They want conservative.
Hey. Listen, we're old too.
See, Ganesh, you're not that old yet. You don't own a CD.
Yeah. And I hope not to, right? So like, and again, I'm not against that. It's just that, what do you think CD rates are? Or, how many of you guys have savings accounts or money markets? What are your rates right now? What are you guys getting? And if anyone says more than 2%,
I want to know the bank.
Yeah, it's gonna be some online bank that I never know on that end of it, right? So, FDIC insured, right? So up to 250,000, Aretha, yep, 0.001%.
That's reality. There you go.
It is, and hey, at least, and what the irony is, like, we know people that, they're just leaving it in their checking account. So you're actually doing better than those people. You're doing 0.001% better than other people when it comes to, or if it's in your business account, it's very limited amount of income that's coming up. So that's a big challenge with inflation. So what are you guys thinking of doing? Like, what's the answer to that with your money, right? If you're actually sitting on cash, right? I'm not talking about the people, and I get it, right? It's difficult for families, and we have the pandemic, and if you're still trying to get by, that's one end of it. But we're starting to see a lot of people in at least our network, or they're just sitting on cash. I don't know about Taryn, Jason, how often you guys get that question, like, I got some cash, what do I do with it? Number one is like, I can't find deals, right? That's like this, on step one. And obviously, if you've been watching our other webinars or on Thursday, we'll show you how to find those deals, but maybe you don't have the time or the capacity, right? You want to be in real estate. How many of you guys actually like real estate? Or you think it's a safe haven compared to the other alternatives out there? That's probably the better question, right? If you didn't like real estate, then you probably aren't on the call.
I think they wouldn't be here if they didn't like real estate.
Yeah, that's what I'm saying. Yeah, for those no-shows, I know you don't like real estate, or they don't like us, or both, right?
Thank God for real estate.
Yeah, so and actually, and I know I actually talked about my background. My bad, actually. Jason, you want to kind of cover your background of what you've done?
So, absolutely, would love to. So I've been in the real estate industry for close to 20 years. I specialize in high luxury residential as well as commercial. Do a lot of commercial transactions, and that we're going to talk about later today, and hopefully give you guys some tips. And we'll get into it. So you go ahead.
Yeah, and Taryn, I know a lot of people feel like they've already know us forever, but
right.
Yeah. I mean, Anish already touched on the fact that I mentor with BPM, newer students getting into the space. I have a Facebook group of women that is over 26,000 women nationwide that do real estate in some capacity. And I'm the newer person into the real estate space. I keep these two young and in check. And that's my role in the company. And I guess the thing that makes me stand out is I really enjoy problem solving and deal structuring. And so that's one of the reasons why we wanted to start the fund, to be able to do bigger deals and structure bigger deals and have investors be able to make a safer and more secure return on their investments without having to do all the legwork to find it, because that's something that we specialize in. So
yeah. And again, so thanks guys. And so when you're looking at investing, guys, what is the most important thing for you? Is it return, safety, security, trust? What if you had one word when you look at an investment? Obviously, you want the more numbers you hit, right? If you say, yeah, it's check, it's better, right? But what is the most, if you had to pick one out of those four, or you got something else that's really, that kind of hits you when you look at any deal, right? So I got a security and profit, security, return. Okay. I'm always kind of curious. I'm like, okay, on that portion, right? So, and in the meantime, while you guys are putting that in there, one of the things our fund, we're looking for accredited investors. We do have a sister fund that we can take a select few for non-accredited investors. How many of you guys are actually consider yourself an accredited investor? And what I'll do is I'll actually put a quick poll on there. And what we can, what is considered, not what I consider a credit, what the SEC considers a credit investor is, you must have $1 million in net worth, not including your primary home. And you should make 200,000 a year, the past 2 years if you're single, 300,000 if it's joint. So.
And it's okay if you're not accredited. There's always investment opportunities and stuff like that. This is just how the SEC defines an accredited investor. And they actually added a term where if you have the education, so maybe like Anish has got a finance degree, he would be considered an accredited investor just because he has the knowledge base to make informed decisions. And accredited investors, the reason why the SEC brought this terminology up was they wanted to make sure that investors weren't being taken advantage of. So like the Madoffs and things like that, they wanted to make sure that you had the money to invest, that if something went wrong, it wasn't going to take you out, right? Like ruin you, or you had the knowledge to be able to make informed decisions about investments. So I always think that's an important, because some people, you say like, are you an accredited investor? And then they think, oh, well, that's not me. There's nothing, I'm going to have to go get a CD and that's not the case.
Yeah, exactly. So, I mean, and I remember when I was like, I don't know if that means, I was even confused. I was like, accredited. I'm like, depends, like, yeah, if your net worth is this, I could tell you that what's happening with the crypto space and the stock market in the last 6 months, I feel like I'm not accredited anymore. No, it depends on what time you look at my stuff, right? Like it's kind of funny on that portion. And I'm just making light of it because I don't know what else to do. So like for me personally, I thought I was diversified. I do have, some stocks that some are, mid caps. I'd have like, the staples, like a little Apple, like some, of all things, I had Facebook, or I still have Facebook, even though it took the crush of losing like 30 or 40%. So I've been, I thought I was diversified and I wasn't. So, I mean, if you guys want to kind of explain how our fund works. So go ahead, Jason, you want to kind of talk about, how the fund, or Taryn, I'll leave it up to you guys because I know they're always sick and tired of hearing me chat.
All right, Taryn, you want to take it?
Sure. So what our fund does, right, as we said in the beginning, is we invest in real estate. And so it's a debt share fund, which is different from other types of funds. So generally speaking, when you look at other types of funds, you look at syndication. Some of you probably heard syndications, things like that. So the reason why we chose a debt share fund is it solved a couple of problems. First of all, is we have $100 million of assets in the fund, right? If we were doing a syndication, or we set up our fund as that sort of like syndication partnership way, you then are investing your money on one particular project. So you have to make sure that we know what we're talking about, that our pro forma numbers are good and things like that. With a debt share fund, because we have $100 million of assets in the fund, you're backing on to the entire portfolio. You don't have to, if we make a judgment call that is wrong on a property, it's not going to affect your returns. And so when going back to what Anish was talking about, is like, what's important to you? We always find that the number one thing that's important to investors is the return of their money. And then they're looking at how much are they going to make on it, right? So if I have $100,000, I want to make sure I'm getting my $100,000 back because, that's okay. And then I want to see how much money I'm making on top of that. So on a debt share fund, what we do is we have different levels of investments. So anything from 25,000 to 250,000, we're going to give you 6% on your money. 250,000 and higher, we're going to give 8% on your money. And then $1 million and more, we can do 10%. And so what that allows us to do is invest in more properties. We invest in properties that are cash flowing. That is our basic model, is long-term cash flow. So the type of properties we invest in, we have mixed use properties in San Francisco. San Francisco, we do luxury rehab. So basically what we do is we buy properties in the financial district at market value. And we have a couple of teams of engineers and architecture, and we add value to it by adding square footage. And then we sell the property at a higher rate because we've added that value, and we see very nice returns in San Francisco. The second thing that we have is we have mixed use in Old San Juan. So if you've ever been on a cruise and you parked at Old San Juan, all of those shops there is a Diamond International belongs to us. The Coach belongs to us. And so it's really cool because at the bottom level, we have things like Diamonds International, and they're a triple net lease. And what a triple net lease means is in corporate guarantee is that the tenant is paying for the taxes, insurance, and utilities, and they're guaranteeing that they're going to pay. So it's a more secure tenant than if I just had, anybody else in there, which raises the value of the property. And then the levels above it, we have Airbnbs, we have office space. And so we see some really great returns from those properties, which is how we're able to offer such great returns to our investors. And then, go ahead.
These are historic buildings in Puerto Rico, and you can go on the website. It's crepr.com, and it's crepr.com, and you can actually see the buildings there, and you'll see some of the corporate tenants on the bottom, like Coach and Sunglass Hut and all these other things. So if you get a chance, we'll do that at the end. We'll see what.
Yeah, we'll put it in the chat. So
and we've had investors go out to Old San Juan, on a trip and go and check out the properties and take a walk and things like that. We've done it. We did it during COVID, which was really cool, except they, had to shut down by 7 o'clock. So that wasn't as much fun. But so that's one of the other properties that we have in our portfolio. And then the third type that we like to pick up are single tenant commercial buildings. And what we like to do with those is we like to find them that are vacant in great locations. And we'll get them under contract, and we'll look for a corporate guaranteed tenant, and we'll negotiate that lease to put them in. And then we'll hold them and stabilize it for 2 years, and then we sell it. So we'll generally buy it maybe a 10 cap. Once we get it stabilized, we'll be selling at a 16 cap. And so we're forcing that appreciation just by having a great tenant list and relationships with corporate tenants to be able to put them into these locations. So those are the types of investments that the fund works on to create the returns that we're looking for. Like I said, your investment, if you're getting you're investing 250,000 or more, it's 8% return. There's never any fees in our fund. So a lot of these places that you invest in, like REITs and things like that, you'll find that there's prepayment penalties or other types of fees that eat into your return. We don't have any of those things. If you need to get your money back out, we'll help you get it back out. So we only ask for a 12-month commitment, but if you need it back out sooner, we're going to see what we can do to make that happen, because we believe that if you need your money back and we give it to you, when you're ready to invest again, you're going to bring it back to us. And then you're going to tell your friends about what a great fund we are. So we really believe in taking care of our investors and making sure that, whatever that they need, it's being managed. So we have a lot of liquidity in our fund, which, if you're working in a syndication, you may find bigger returns, but now you're getting locked in for 3 to 5 years because they have to acquire, they might have to do some value adds to it to get it cash flowing, and then they have to stabilize it before they sell it. So those are the things about our fund that makes us very unique from what you can find out there. The no fees, the liquidity, the $100 million of assets, we're backed by the SEC. And I know Anisha's got a great story. He's invested, and I'll let him tell the story. He's invested in, is it a marijuana fund or something like that? That it's been going on for years.
Yeah, thanks. Great story. Yeah. Meeting, so same thing, like, hey, we're gonna, this company, it's actually a massive fund. They raised, actually their first raise was closed, it closed down at 90 million. The second raise was 450 million. There was a minimum $250,000 investment. A bunch of us got together. We're thinking, okay, we're gonna put some of this money and we're not going to need the full 50. And then of course we did. And long story short, it's been tied up for about 4 years. The fund's supposed to last for 10 years. I pray I just get my money back. Like I'll keep it kind of easy on that end of it. But it was a little bit challenging not knowing, right? So like I actually are having those issues, meaning I love to get that money back out, right? Either put it in my real estate or whatever else that I am generating income. A couple things that Taryn kind of touched on. So some of you guys might be saying Puerto Rico, what the heck? Hurricanes, guess what? Old San Juan's been through numerous hurricanes is number one. Oh yeah, that little thing called a pandemic and the cruise ships stopped. Guess what? All the tenants kept paying. We're getting almost 18 to 25% returns on the actual from the tenants. So that's why we're able to pay, or the fund's able to pay your returns. Again, the other thing is, which I thought was pretty, we do have our partner, Sharif Medawar. Some of you guys have actually met him when he spoke in person. One of the things he did, I don't know, I spoke to him the other day, but you're going to trip out. Like, our occupancy rate is 100%. He literally has a waiting list of commercial tenants trying to get in there. So I think that's like, and again, it's diversified on cash flow. I know Taryn used a bunch of terminology that maybe some of you newbies might not know. Triple net lease, right, is where, the tenant is responsible for everything: taxes, insurance, maintenance. Corporate guarantee. The great thing about corporate guarantee, especially like a Walgreens or some of these big, like Coach, what they do is, even if for whatever reason the store goes out of business, they will fulfill the rest of the contract. And banks are so positive about it, they will up the rent for easy numbers. Let's say it's $10,000. They will count the rent as 20 to 25% above. So $12,500 is what they'll count it. So it's good as gold in our industry as you could get, versus a mom and pop. Diamond International, they're probably the biggest diamond store in the whole Caribbean. Like, if you're on any cruise, it's on every island. I actually, I hate them.
I was going to say, it's part of my trip. You have to buy something.
Yeah, I'm just saying is, I know Jason's also married too. I know his lovely wife too. You just walk very fast past Diamond International.
Hey, it's tax-free. Taxes on those items. What are you guys talking about?
Yeah, she's gotten into your head. Good. Yeah, but you still have to pay for it, Jason. So so like that's the quick version of what the fund is, right? The other key points that Taryn did bring up, that we actually have no fees. And when we say fees, no management fees. I don't know how many of you guys are actually invested in REITs, REITs.
So while they're answering that question, I wanted to answer two questions that just came in really quickly. One, Ray was asking if we've ever had to do a capital raise, and no, we haven't, because of the way the fund is structured. You can invest what you're investing. You get paid from day one. You're not waiting for us to invest it in or acquire a property, right? So you're investing from day one, and your money's starting to work. And so the second question that was asked was, what is a cap rate? So the easiest way to, and Anish might back in on this, but the easiest way for me to describe a capitalization rate is, how hard is my money working for me? So if I am investing 100,000 and I'm making 10,000 back, right, then that would be a 10% cap rate. So in other words, if I'm getting right now in South Florida, if you've got a rental, right, or a multifamily, you're lucky if you're getting a 4% cap rate. That means your money's working for every 100,000, you're making 4,000. So obviously the higher the cap rate is, the better return you're getting on your money. So if we're buying a single tenant building at 10% cap rate, right, we might be buying it at $1 million. It's, as a vacant, it should kick off 100,000, right? That's what we're paying for. But we're going to stabilize it, and now we're going to sell it at a 16 cap rate, which means that we can get 1.6 million for that same property, and we're appreciating at 600,000, because that's what a new buyer will pay for that income.
Absolutely.
Well said, Terry.
And I'm going to piggyback on that capital raise. So what happens is, if you're in a syndication, right? So syndication, you get a bunch of group of investors, and what Taryn was talking about, you're all in one asset. So there is a different risk level. You better hope that you have a good management team. So when you're looking at these big funds, they're going to say you're pro forma, right? What they think, if everything works out, this will be your returns in 3 to 5 years. We need X amount. We're in the project. And then guess what happens sometimes, right? You're in the project. You know, if I know some of you guys are rehabbers, and how many of you guys, you go into a house and you put the budget in, and then you go in and you're like, oh crap, there's mold. Or, oh no, we have to redo the electric. We didn't really budget for that. So when you run out of money, right? When you're working on these projects, what do you have to do? A capital raise. You go back to, you know, hey, Jason, I know you put $100,000 with me, but I don't know, you know, the roof on the building, we need another $350,000. And we're going back to, you know, to all our investors, and, you know, we broke it down, and we're thinking we're going to need another $20,000 from you to be in the game. And I've actually been in one of those calls, meaning on the wrong side. It's not a fun call, right? It's like the easiest analogy I could use it here in South Florida is if you live in a condo, especially like in the older Miami Beach condos, I remember.
Assessments. Oh.
Assessments, yeah, like an assessment. You're never happy when you get that call and like, or the board says, oh, we need an assessment. It's the larger version of what an assessment is on these kind of projects. So that's one of the challenges when you come to that. One of the things that, you know, if you've been following us for a while, you know, we've had a lot of different people speak. You know, we talk about arbitrage, right? Using other people's money. I saw a comment about leverage, right? So if you're buying a house, if you're using the bank's money, you're leveraging, right? You're not using all your money. It might be private money. You're leveraging. You might be seller financing. That's leverage. So there's a lot of different ways to leverage. And, you know, one of the tactics I used, and thank God I kind of did this, was I had an investment property, or I still do, a couple of years ago, and had it paid off in cash, right? How many people, you know, like paid off in cash and I don't have nothing to worry about, you know? And I'm like, I even know better for myself, but I was like, okay, well, you know, so what I did was I actually refinanced the house when rates were low. If you guys can remember how long that was, you know, only a few months ago, right? So I refinanced it, cashed out. The place was worth about $350, cashed out 75% loan to value, got a loan for $227,000, and my rate was 3.75. And so what I did was, guess what? I put it into our fund. Obviously, we believe in the fund. I practice what I preach, and I'm using the difference from the 250 because I combined it with other structures or money to get over the 250 threshold, and I'm getting 8%. So I am basically making 4.25% on using other people's money. So it's an easy, and I got to park it. I'm deducting the mortgage interest also. And just by doing something like that, that's an extra $10,000 a year.
Wow.
Is what I'm making.
Every time you say that, I have to say this.
Yeah, and that's just one strategy, right? That's I'm using. I'm using my life insurance, right? So who's, you know, some of you guys have seen Unbridled Wealth. They're one of our corporate vendors. Talk about how to use your life insurance. So overfunding, and again, this is not a life insurance class, overfunded my life insurance, got coverage, got a line of credit on my cash value. Guess what? The rate is 3.75 again. Guess what? I put another $250,000 from there. So now, you know, well over $500,000, and I'm making well over 4%, 4.25, $20,000 a year, right? So that's almost, you know, now I can't do the math. That's 1,500 and change of, I'm not calling free money. What it's doing is I'm just leveraging it on that portion to make it a win-win. So it's one of those things that, you know, it's a way to make your money work for you. Again, I am in stocks, right? I had to have some retirement, and I'm like down like everyone else, so I never want to even look at it. And I don't know about you, Jason. I know you got some money in the market too.
Oh, I don't want to talk about it.
Yeah, I mean, like, I'm just like, please just let me get my money back. Like, it's so weird.
You know, having said that, and that's the key thing, is having your money work for you. That's the secret to everything. So if you have your money locked up, whether it's a syndication or a REIT, it's not working for you. You know, you don't know what your end result's going to be. Your money's tied up in the stock market. You don't want to sell because you're going to take a big loss. Your money's stuck, so you're not liquid. Yeah. And that's one of the main reasons why I found that the fund was so attractive, because we only asked of 12 months liquidity. I mean, you have opportunity to move money around, and I found that to be one of the greatest, things about the fund, to have that opportunity to, your money's not just sitting on the sidelines of the bank, but it's actually making money while, in that short-term duration. Now you still can leave it longer if you want to have compound interest, but you're the whole game of success is you have to have your money work for you.
Yeah. And so I'm sorry, go ahead.
Oh, no, I was just going to say that's a great point. The wealthy move money with velocity, and it's how they move their money to capture these gains here, here, and here that causes them to get these double-digit results, right? Most people, the 95% of us, will be like, oh, okay, I've got $10,000, let me put it in stocks, or I've got $10,000, let me put it into, or maybe more than that, $100,000, and I'm going to put it into a house. But when you really get good at leveraging, things like your life insurance policy and things like that, and starting to create arbitrages, and you start to move that money into different areas, you're going to capture those gains. And that's really what's going to set you up for generational wealth when you do it correctly, right? And that's such an important point. So many people I know, money at the moment, there's people have a lot of money because we're just coming out of a booming economy, right? And it's like, what do I do with this money? They can either buy, and a lot of them are rushing into bad investments. Right. They're buying things, real estate, especially, 5% cap rates, because that's the best they can do. And their money's just sitting in the bank. Right. So that's the worst thing a wealthy person can do, is let their money sit there and do nothing, because as it's sitting in your bank account, it's losing money due to taxes and inflation. So you've got to get it working for you.
Absolutely. I just saw a question here. Somebody asked, do we accept 1031 exchange?
Wait,
now
Jason,
we're going to.
Jason, we need 1 sec before that, and because we'll go it is a great question. What I didn't talk about when we're talking about the arbitrage on that life insurance. Yeah, I made the money on the spread. Oh, by the way, I am still getting dividends. So last year on the arbitrage between using my life insurance, oh yeah, by the way, it covered my family for X amount in case something happens to me. I looked at my numbers, and some of you guys know me, I'm a pretty big number nerd. So is Taryn. That's why we're probably friends on that. I made 22% on just moving money, doing nothing different. And that's on $250,000. So you could figure out the math. Hopefully my wife's not on this call because I don't tell her about that. So she's like, oh, that's free money. I say free money within our portfolio. It's free money. It's never, ever free, of course. But yeah, Jason, yeah, go ahead. I see the question that.
Someone just put in the chat, do we accept 1031 exchange? We're actually going to cover that in a little bit, but just to answer your question, yes, we do, but it's done in what we call a sales installment. And we're going to go into that right after we finished our conversation here about moving money.
Yeah, and actually, we should kind of get into it. How many of you guys, you know what? Let's kind of get into 1031. So,
okay,
Jason, if you want to share your screen. So, How many people know what a 1031 exchange is? Just out of curiosity on that portion. Go ahead and put in the chat, or put yes, no, what you think a 1031 is in general. It's always good to see. All right, a couple of you guys know. Yes, no. I got
just making sure you guys are with us and not falling asleep, because I talk a lot.
Yeah, right.
So guys, today we're going to do a whiteboard. It's a beta test. I want to see how it comes out. Yeah, and your responses at the end of the meeting will be great. If you like the whiteboard, normally we do like we'll do a standard keynote or point PowerPoint. But we're going to try this whiteboard and see how it flows today, and that we're going to get right into 1031s. All right, so let's see how this rocks. So I like the hand here. It's kind of cool. So what is a 1031 exchange? Okay. How many people do you know what a 1031 exchange is? Has anybody done a 1031 exchange before? Anyone?
Yeah, there's a couple of that said yes, they know, but some don't. So yeah, go ahead. Give them.
So basically, the IRS, when you have an investment property, the IRS gives you time to identify another property like or higher to roll in the capital gains into the next property. So it kind of offsets, it defers the taxes, the capital gain taxes. So if I'm talking Chinese to you, let me explain to what capital gain taxes is. So let's say you have the sales price, okay? And then you have your cost price, okay, your cost basis. In between is your capital gains. That's the money that you made on that property, that investment property. So that money, what you want to do is protect it and roll it into your next property to earn more cash flow, you know, so you reinvest.
So let's just give them a number example, right? So if I buy a property at $100,000 and 10 years later, I go to sell it and it's worth, I can get 300,000 for it. My cost basis is 100,000. That's what I paid for it. The 200,000 is what I'm making on it. Now, if I just was to sell it, depending on where I am in the tax bracket, especially if I'm younger, right? I might be in a higher tax bracket. I might lose 30% of that. If I'm in California, could be 50%, right? So of that
Florida, we're at 15% in Florida.
Say that again.
In Florida, we're at 15%.
Yep.
The common number. You could be 20 depending on your tax bracket, but 15% is the number. And then we don't have any state tax, which is great. I mean, that's why we're an attractive state right now. There's no state tax. You have to pay extra. So if you calculate that money, you know, that's a lot of to pay the government, you know? So 1031 is actually, you know, you would structure that, you pay that at the end of the year on your federal tax returns. There's a special form. I think it's an 8-4 or something. You would actually do it with your CPA. And then you go through, okay, what was my cost basis? The cost basis would be your expenses, your improvements, and you figure out what your cost is, how much you owe on that property, you know, what you paid for it, that would be your cost basis. And then you have your sales price, and in between there is your capital gains.
Yeah, and you can also add, like, there's depreciation and all the other good stuff. Basically, the idea is you want to push that tax burden in the future because you want to invest in some money. You don't know what to do with the cash, and you're probably going to, you know, buy something else. So it's very popular for wealthy or, you know, to actually constantly build assets.
So I have a quick story on this 1031, and I'm involved with a lot of clients who do 1031s, and sometimes I get clients that come in late in the game. They're already into 1031, and the clock is ticking. So they come to me, they're already 2 weeks into it, and I'm like, wait a second, what are you doing? You have 45 days to identify in a low inventory market. You put yourself in a very difficult situation. Okay, so here you are, low inventory. We're going to get to the market size and everything, but I'm just explaining to you the story. So she put herself, you know, she actually basically wrapped the rope around her neck, and she was forced to find something, get into something before the 45 days was out, because the IRS, they will come down on you if you don't identify in the 45 days. Everything has to follow through in a proper procedure. So long story short, we looked at multifamilies, we looked at the cap rates, and then she got into something, you know, half decent. It wasn't great, you know, it was a 5% cap rate, but she had to do it in order to protect her capital gains. So, you know, at the end of the story, I was able to aggressively to find something for her to get another multifamily and to move her money. But I mean, it was just by pure luck. So basically what I tell a lot of people is, before you get into contract, you want to know where you're going. You know, you want to know, okay, what am I going to identify? What can I roll my money into? So you want to kind of line up. If you have a buyer that's going to buy your property, you don't want to lose the buyer, but you got to tell the buyer, I need a certain amount of time before we get into contract and sell this property. I need time in the contract to actually identify my next property. So you have a lot more time. You want to give yourself a lot more days to identify the property. And then you have 6 months to close on that transaction. So it's all about how you line it up. And you want that buyer to understand, I'm doing a 1031, and I need you to work with me on this. Normally they understand, and they will work with you on it and give you that time frame in order to do a 1031 exchange.
Yep.
But we're going to show you. We're going to show you another. We're going to show you an alternative today, which is very attractive.
Jason,
Sorry.
hold on a sec, because I know the screen, it says it'll identify 45 days behind. I'm not sure if you can move that. Yeah, there you go. Thanks, Jason. So you do have to close the property in 6 months. So I know the screen was kind of not showing it. So there you go.
Yeah. So the end goal is what are the investments goals for doing this? What's the ultimate goal, and keep rolling your money in, and obviously it's to use that capital gains for more wealth. It's for constant growth. So 1031s work for a lot of different people. Everybody's in a different predicament. What works for them? Not everything works for everybody else. So we have a question here. Are you considering a 1031 exchange in the near future? And the polls are rocking right now.
Yep. So again, the 1031, it's a good way to defer taxes. That's probably the easiest way I could say that.
Exactly.
On that portion. So again, this might, what we're talking about is a nice alternative of how our fund can help you with this.
Okay, we finished with the polls. I got this polls in my face.
Yeah, just minimize it. I'll get out of your way.
Okay,
And I will say, that's the biggest challenge right now, which is what makes this very attractive, is right now you can get crazy prices for your property. The problem is that you're paying crazy prices on the other side. So how do you sell your property, capture your win on your investment property, and yet not have to buy a bad property or a bad investment and not have to pay taxes? And so that's what this really is going to speak towards as an alternative way to make that happen.
And I just want to correct you a little bit, Taryn.
Oh, go right ahead.
I'm not saying, again, she's not saying not pay taxes, defer paying.
Defer, yes. Yes, thank you.
I don't want to be that
I'll pay
webinar.
taxes now.
There you go. People are like, oh yeah, those guys are talking about how you don't pay taxes. That is not us.
So let's talk about what's going on in today's market. Okay, you can still see this thing in the middle, right? I'm trying to get rid of it. 1 second, guys. Sorry. How do you minimize this part?
Nope, you're good. You just close. You're good. We see your screen.
Good. All right, good. Because I have one. Okay, let me get rid of that. Okay. So what are the challenges in today's market? Market prices are all-time high. It's so difficult right now. We can all agree to find property, okay, especially with good cap rates. I mean, it is very tough out there. So at this point in the market, I speak to a lot of investors, and I'm out there pounding and looking at different properties and different investments. It is probably one of the most toughest times to get any good deals. I think we can all agree on that. What do you think?
Unless they're using the way we find properties. Of course, I'm biased on that portion, but the traditional way of finding properties and identify is not easy. And again, the larger portfolios, it's definitely not easy. I'm surprised no one's actually asked me about the 1031. It doesn't have to go through one property either. So let's say you have a property at 100,000, you sell for 500,000. It could be two properties that equal 500,000 also. So don't think it has to be one property, even though, and what I thought was kind of important was what Jason was talking about, his client, is when you're on that deadline, the 45 days, and you have to close it within 6 months, you make a lot of bad decisions, right? And meaning hey, or what the other decision happens, I'm just not going to sell a thing. I don't know what else I'm going to do, right? And doing nothing or being active about your financial position, it's not going to get you there. You want to be active on on generating, moving money also. So I think all the things that a lot of investors are dealing with.
I think we can all agree it's tough out there right now, and that's where the market. You're going to pay a premium. You're going to pay a premium on any purchase. You are. I mean, because the inventory is low, and right now sellers are asking ridiculous amount of money. So let me ask you guys a question, and here it is on the storyboard. So what if you want to cash out? What if you don't want to do 1031? Let's say you just want, I want to get my money out. I want to use it for other things, for other investments, but I don't want to pay those capital gains, So what's the alternative here? So we actually came up with a great alternative, which we're going to explain to you. What we call is a sales installment alternative. And I'm going to explain to you how it works, which is great, because not only you're still receiving cash flow, and you get to keep your capital gains. I mean, that sounds, you get your cake and you eat it. I mean, tell me, is that not an amazing situation to be in? You get everything. And you say, what's the trick here? You know, there is no trick. We always try to figure out, okay, how to break the code. How do we secure ourselves from taxes, protect our money from the government, and to do it legally, but and still benefit cash flow. I mean, that's the main thing here. So we created a structure where you're still investing into real estate, which is going to be in the fund. You're going to roll your capital gains into the fund, which I'm explaining to you, and you're going to receive your return on the interest. Your capital gains will sit in the fund, and you'll receive that interest. Okay, the interest you'll receive since day one. You'll be receiving interest on the capital gains. And that capital gains is going to pay down your penalty, your tax penalty on the capital gains. So I'm going to explain to you how that's actually going to work and how it pays down your taxes. So like I said, we created the sales installment, which defers your capital gains. Okay, and what happens is now you're earning money. Now you're having income come in, since day one. And what's great about the fund, you get paid biannually. You're getting paid every 6 months. You get paid out this interest, okay? And it's actually income earned. So it's money that you're earning, but the money you want to put on the side to pay down eventually, you're gonna have to pay the taxes. Uncle Sam's gonna call you when you take that money out of the fund. You're gonna have to pay your capital gain taxes, but you're making the money. You're gaining cash flow to exit out. So you're making money to pay off that debt to the government. So I think it's the way we created it. I'm going to explain to you how the process works in the transaction. So when you the fund acts as a transaction coordinator. So the fund will come in the middle of the seller and the buyer, which is you're the seller, okay? And what it does, basically, it will turn around to the seller, the seller, and it will give you a note for your property, okay? It will pay you the cost basis. So everything you all your costs, all your fees, the commissions, or whatever it is, your cost basis will be paid, okay? And you'll get a note for your capital gains. So now you'll be invested inside the fund. And at this point, what happens is now the fund is buying it from you. So the fund will buy it from you. They will actually, after they purchase it from you, actually go into escrow before any transaction is done. So they'll get the deed to buy it from you, turn around to the buyer, okay? And then they're going to do the transaction with the buyer. So the capital gains will roll inside into the fund. Okay, that will be step 2. And now what you have, you have your capital gains in the fund, okay, earning interest since day one. Did I go too fast?
Wait, yeah, so Jason, I'm going to step back for a second. So okay. I just want to make it really clear is the fund is just like what Jason's saying in the middle. So I have a property, I want to 1031 it, right? And meaning, I identified a new buyer in the in-between, and it's a same day transaction is number one, right? It's like almost doing in the regular residential, it's almost like a flip, a double closing is indirectly with seller financing, but it's all happening at the same time, meaning you're gonna find same situation, you're gonna find a seller to buy your property, and so it's happening in the middle of at the same time.
So what you want to do, there's a very important factor here. What you want to do is actually, before you get into, you can't get into contract with a buyer. The fund needs to do the contracts. So you can't get into 1030. You can't do a contract and say, I want to do, now I want to do this sales installment. It's too late. You have to do it from the very beginning. So the way we could do it, we would talk about the structure and coordinate it with the attorneys and just be the middle coordinator in the transaction between the seller and the buyer in this situation. Does anybody have any questions before I move forward? I know I talk a little bit too fast. I'm not like Taryn and Nish. They're a little bit more polished and speak, and I'm a little bit fast talker. I'm from Jersey. What can I tell you? I speak a little quick.
I speak super fast. Alfred asked that we confirm that the cap gain is only on what you take out of the fund.
The capital gain is only when you take out your capital gains out of the fund, that is your money that you're going to be taxed on. The original money that went in, not the interest earned. The interest earned is your income.
And so we're going to have an example of that. So why don't you just keep going through it, Jason?
Sure.
Like, we want to show you the process first, and then we'll give you an example of how it actually works in real terms.
Exactly. So now we're just talking about what the fund offers here at this point. So we covered this earlier before in the video: fixed rates, payments biannually, no fees, no penalties, and the best part is liquidity 12 months, which is phenomenal because at this point you can move your money around for your next investment or whatever you want to do down in the future. So we did come up with some of the formula capital. So let's say you have a $500,000 capital gains, you're 8%. Okay, you're earning $40,000. $40,000 in the fund. Your income, that's income earned.
Yeah. So stop for a quick second. And what I mean by that is, so you bought a house for 500,000, you're moving it in your capital gains, you sell for $1 million. Again, we're using super, easy numbers. So your capital gains theoretically is 500,000. We're assuming you take that 500,000 and you're investing it in our fund. And that's how we're getting the 8%. Remember, anything over 250 is 8%.
So if you think about it, it's like a seller's mortgage almost. You still got cash flow, you're still invested, and the best part is you're earning money to pay down that tax penalty, which is phenomenal. I mean, so you're earning money to put away, and you can leave it for compound interest. You can roll it in. So here's another scenario: sales price is $1 million, your cost basis is 500. Here, we keep it simple. Florida penalties is 15% taxes. So what happens here? Let me show you. Here you go. So if you're at 15% out of $500,000 capital gains, you're paying $75,000 to Uncle Sam. 75 grand. So in 2 years, if you're earning 8% on the 500, right? Almost in 2 years, you're paying off that penalty. How do you like that?
Yeah. So there's a couple of reasons why investors would do this, right? Let's talk about those. Go ahead and put it in chat. How many people think there's going to be a slight correction in the market? What do you guys think? Right? Sean, me, yeah. Yeah, I mean, I'm not going to say there again, if I knew all the answers, I wouldn't have to worry. It's like knowing the lotto numbers, right? So I don't think it's going to be like 2008. That's my own personal, like, you guys have heard me. I've talked to other economists, and we've kind of like, I think there'll be a correction, right? There's no way that the prices could keep going up at the level that they're going. So how would you like to, cash in, or right? Jason was talking about cash out on that investment property that someone else is paying X amount. And again, this is just a strategy. I'm not saying for your whole portfolio, right? So you might have other things. You're still flipping houses. You're still doing short-term rentals. How would you like to maybe have, and I'm using this scenario here, basically you're getting your total money, that 500,000 in 2 years. So the fund is theoretically the money that you earned on that interest is going to pay your actual taxes that you'd be based on the 15%. So 2 years later, now you got that cash sitting there on that portion where now you can move that money to another investment. Or what we found in general with a lot of our investors, it always sounds easy unless you're in this full time, meaning looking for deals. Sometimes it's just easier. They say, hey, you know what? I'm just going to put my money and not worry about it and just let it compound. And what we haven't really talked about was the power of compounding interest too. So even though we're saying 8%, you'll see very quickly, I think if I'm correct, it's with compounding interest, I think it's about 7 years, you double your money, give or take. And what you'll realize, 7 year goes by pretty quick is what I would say. So it's just one of those things that it's just an alternative depending on what you feel on what's happening on your market versus, again, Jason's dealing with a client where they may or may not have made a bad decision or at least a rushed decision just so they didn't get with the tax.
Well, what this gives you also, it gives you a place for the market change. Eventually the market will change. We don't know when. Everybody can speculate. But, the problems we're facing right now is it's not the interest rates that are affecting the market. It's the supply and demand, especially down here in South Florida. So right now, this gives you an alternative to not buy at a premium, not to worry about improvements, not to worry about, okay, what my next cap rate is going to be. This gives you more of a clear head. Okay, I put my money here for a while. Let's see how the market changes. And then I can reevaluate and see what I want to do down the road.
Yeah, and I'm also going to add, I know we have investors who are on this call where you're outside of South Florida market. Maybe your market is, booming right now in Oklahoma. I don't know. I'm just throwing some random place. And you want to get your money out of that territory, or maybe what's happening. Maybe there's a manufacturer leaving, right? Like someone, GM. I'm not using GM, but whoever. Like I think Boeing's actually in Oklahoma, and they were having some issues. So you're worried about, hey, I got this 12-unit building. We're going to lose jobs. I found this guy from California that's willing to pay X amount. Let me get out of this area and put my cash in. So, and I picked Oklahoma because of you, Shannon. That's one of our students. So.
Yeah, and I think it's very important to remember, like we are in a very, like Roosevelt said, like we're in interesting times, right? By doing an installment sale, and it doesn't necessarily have to be with your entire portfolio. By doing an installment sale like this, it allows you to have flexibility within 2 years, right? And if we do look at a downturn, now you can take advantage of the prices as they're downturning versus I saw one of the people were asking, like, with inflation and everything like that, wouldn't it be smarter to be in real estate? Well, if you're paying a premium for the real estate because you're on a time deadline to acquire it, and you're paying a premium and the market happens to downturn in 2 years, and again, we don't know, well, now you're stuck in that real estate until the upturn, right? And with inflation, with the cost of materials and stuff like that, who knows whether you're buying it with enough of a spread. Like, you really have to know your numbers, and that takes a lot of due diligence. What Jason was talking about is like a reverse 1031 exchange, where you're finding your property first and then trying to sell your property. I mean, that's the way I would do a 1031 if I was actually looking for real estate. There's no ways that I would start a 1031 with my property and then hope that I find something. I would identify first and then look to sell.
That's the safest way. If you're going to do a 1031 option, that is definitely the safest way to do it. You have to, because you don't want to be under that deadline.
And the thing is, like, again, I want everyone, I'm being very clear about this. We are not against 1031 exchanges. So it's just an alternative. And it might be just on one property, right? You might have like 7 or 8 properties and you're able to identify, for 3 or 4 of them. But now you're saying, hey, you know what? Maybe I want to park some cash somewhere. So that's, like you could use like a hybrid. So it doesn't have to be all like, hey, this is all I'm going to do.
But I think the secret sauce of investing, we can all agree, is timing. I mean, if you can time the market, that's the key there. And that's where you want to set yourself up in that position of timing. So you can have your cash tangible when you need it to pull it in, pull it out, reinvest it. I just think as of right now, the market, the way it's going, you're paying premiums, you're not getting the cap rates that should be getting. I just think it's a tough time for investors, And
I see Carell stated that Joe Biden said that he's going to try to eliminate the 1031 exchange by 2023, and he's asking if it'll affect investors. Well, if you've done the installment sale, it wouldn't affect you, like if you've already gone into it. But I do think that if he gets rid of the 1031 and you're sitting there in 2023 looking to sell your property and there's no 1031 or installment sale, the reality is that you're probably going to sit on the property for a little longer, you know, depending on what you're trying to do and things like that. So I definitely think the 1031 stimulates the economy. And by getting rid of it, it might force us even farther into a recession.
Right, and you can take two positions here. You can say, okay, you know what, I'm not going to sell right now. I'm going to increase my rents. I'll hold on long term and then wait for the market to change. But then again, you're not selling at the high. You know, you're missing the opportunity of getting a premium for your property. So it's like all timing. I mean, how do you want to position yourself? So everybody's in a very different situation.
So it's really great that you brought that up, Jason. So a lot of people, you know, it's an opportunity cost, right? Why do we sell an apartment building? Because we have so much equity in there that we want to move into other things, versus our return on our equity now might be so low that it doesn't make sense to leave it in that investment, right? That's the reason why we start to, you know, otherwise, I know some investors, they'll buy an apartment building and they'll hold it for 40 years. That's their investment strategy. Others will buy a property, and when their return on their equity gets to a certain point, you know, if your return on equity is sitting at 5% and you could take that and move it into a fund and get 8%, that's called an opportunity cost if you leave it in that investment, right? So it really is, you know, and what are you looking at as an investor, and what are your strategies to create wealth? And, you know, me personally, if wealth is created by the movement of money and the velocity of money and being able to expand your portfolio, then the installment sale for a 1031 is definitely something to look at in this market because of how it's changing right now.
Yeah, and I know Rosa's asking, is the 8% return is fixed? It is fixed. So while you're in it, as long as you're over the 250 amount, we'll do as little as 25,000, and that is 6%. So, and I think I saw someone talk about, hey, you know, what, because of inflation and all that other, again, our fund, it's fixed returns. Otherwise it'd be variable, right? Oh, if inflation goes down, up and down, there's enough other funds that do that, right? This is the peace of mind. And, you know, one of the things that, you know, Taryn and I have talked about too, is that, you know, luckily, you know, I've been in, you know, real estate, and things, you know, have been good, right? And I use multiple strategies. And, you know, Taryn was talking about, you know, one of the things she looks for me, what I'm trying to move from right now, if I looked at my income bucket, like in a circle, I would say 90% of my income is active income, meaning I have to wake up and do something to make money, right? And only 10% is passive. And actually the irony, really the 10% is, guess what, in the fund. So I'm trying to move that, you know, to make it even, you know, maybe a 70-30, meaning 70% passive, 30% active, just because I like doing this and making deals happen on different things that I do. But, you know, I don't want it to be, you know, my financial world of like, hey, this is what I'm doing, is making great money, but am I enjoying, you know, time with my family, my friends? Am I, you know, working on my personal goals of what I want too? So, and again, you know, Taryn's talking about opportunity costs. Sometimes it's just time, and I'm talking your personal time.
Right.
And then the other thing I wanted to also kind of touch on was timing the market. Let me know when, you know, the greatest investors in the world don't know how to time the market. You know, like I love, whether it's the stock market, you want to talk about crypto, and my favorite still, and again, so I'm guilty of this, I should have sold it at this price. You know, woulda, coulda, shoulda on that end of it, right? So if your whole thing is about timing the market, let me know how that works out, you know, or how is it working for you? Maybe you're way better than I am, I can tell you that. So,
you know, I talk about what I like is called cracking the code. Now everybody's in a different financial situation. So cracking the code, this is what I call cracking the code. You need to figure out what your expenses are monthly. It could be $5,000, it could be $10,000 a month. And if you can actually figure out the formula of passive income to come in, you know, whether it's real estate or whether it's the fund, and you have passive income to actually equal up to your expenses, you know, you've cracked your code. Now you can start accumulating real wealth, because once you get your passive income coming and your expenses are paid off, now you can really breathe to make really great investments and really acquire wealth and become successful. I think that's what I call cracking the code.
Yeah, good point, Jason. Totally agree.
So we were talking about the market again, and now why is it that the fund doesn't really get affected that much at all? Because right now with COVID, that hit the last couple of years, people didn't want to travel outside the U.S. because of a lot of restrictions. Going to Europe, they had some major restrictions, and other places. But Puerto Rico is in America, so the restrictions were very lenient. We flew out there, me, Anish, and Taryn. We go see our partner Sharif out there, and we go and look around and see how the businesses are thriving and how everything's doing well. So really and truly, there's been more tourism in Puerto Rico than ever. Okay, the boats, the cruises have been headed out there. They're back on track. People are cruising. COVID is diminishing. Thank God. Can't stand COVID. And so it doesn't really affect the economy out in Puerto Rico as far as tourism. So, and now we're talking about interest rates rising. It doesn't affect the interest rates doesn't affect this. Most of our properties are all cash. It's all cash transactions. We don't have to worry about the interest or mortgages or any of that stuff. It's all cash flow. We're leveraged very well, about 50%. So none of these things affect the fund, so you're always going to get your fixed returns. So whatever you get, whatever you put into the fund, whether it's under 250, you get 6, and anything over 250, you'll get 8%. So that we have nothing to worry about as far as the economy changes. Also being in Puerto Rico, we have what's called, we have major tax benefits. So it gives our margins a lot better for cash flow. So, I think Puerto Rico gives one of the best tax benefits, anywhere in the United States, So there's a lot of great things of why this fund is so strong, Can you see the bottom one? The bottom thing, it says triple net corporate guaranteed.
Yeah, we talked about that too. So
Okay.
I know we're wrapping up on time also. Make sure you guys put your questions in the Q&A on that too. So I'm always kind of curious in general. So, for us, we're passionate about it, right? And I always think it's important that, some of you guys know me well, some of you guys don't know me very well. One of the things is I always put my money where my mouth is, right? So, we constantly get, hey, is the fund guaranteed? Again, this is an SEC fund. It is not guaranteed. I just want to make sure that you guys understand that. But it is collateralized with real estate.
It's low risk, very low risk. So we're going to get into the endpoints of this presentation. So
yeah, just out of curiosity, I know kind of Jason, we're always trying something different here at BPM RIA and kind of figuring it out. And I know, me being Indian, you would think I'd be the most technology savvy out of the group. I am not. It's I don't know, it's at least Jason or Taryn. But even to come up with a whiteboard, we wanted to kind of do something a little different. Just put in the chat, do you like whiteboards or the way we're doing it versus a PowerPoint? Or I'm just kind of curious on that, just as our own personal idea of what's happening too. So. Yep. So, look, a couple of people do like the whiteboard and they like the infographics. It simplifies the explanation. Okay. I know a couple of you guys are raising your hand. If you could put it in the chat, your question, that'll probably be easier for us on that portion.
Oops. There we go. This is the technology part that just went out the window.
Just jinxed it.
There's the blooper I was waiting for. What happened? Let me see if I can
It was Anish. He mushed you.
Yeah, exactly.
There's the blooper. Oh.
Yeah. So one of the things that, if you guys are interested, I know Alexa's been putting it in the chat to our website or our phone call, and you can book an appointment with any of the three of us. And I know you guys are going to have some questions on your situation. One of the things that we probably didn't talk about is you could combine your money to hit the threshold, the 250. So maybe you have 50,000 in a checking account. The other things I'm like, you heard me talk about. So I'm using regular cash, number one. I refinanced an investment property and I'm using the other, the bank's money on arbitrage. I'm using my life insurance that I overfunded, got a line of credit, using that line of credit arbitrage again. Oh, and by the way, I'm using my self-directed Roth IRA. So if I just gave you a bunch of mumbo jumbo and you're like, not sure what any of those mean, you might already have it. Meaning we've had people, they've left their employer. I know a lot of you guys have your current jobs and it's just kind of sitting there. And you want to, what I tell people, hey, I get it. Some of you guys are busy and you don't have time to find deals. Makes sense. But you want to be in the real estate space. So this is a good way to get into the real estate space.
Yeah, I think we might have lost
Did I
Dinesh. You're
freeze by any chance?
freezing up a little bit.
Yeah, I think, yeah.
So while he's unfreezing himself, I see a lot of questions regarding like getting more information. Alexa just put up the link to the YouTube channel, so this recording will be there as well. But the easiest and best way is to go to dpifund.com and you're going to see schedule a conversation, and one of the three of us will give you a call back. And so we can go through what it is your goals are, what you're looking to do, and see whether and answer any questions that you have. And then we take it from there in as far as next steps. Are you unfrozen, Anish?
Are you going to take I can't unfreeze him. Are you going to take questions?
Yeah, absolutely. Anish is unfrozen.
Yeah, I'm
defrosted.
Yeah, exactly. That's it. I mean, that's the world telling me that I talk too much. So hopefully you got, I don't know where I froze at, but I was using 4 different methods to invest into the fund to get well over the 250 mark to get the 8%. So don't feel like it has to be in one account. So you could combine money in there too. And if you have other family or friends that may be interested in this and they're looking for an alternative, obviously, give them our website, speak to one of us. We're not high pressure. Obviously, if you know me or, Taryn or Jason, we don't believe in it. We want to make it a win-win on that portion of what we do.
And that's what we call diversify passive. Diversify your portfolio a little bit here, a little bit there. Not everything.
Absolutely. So before we go, if there's any last questions, to throw them in the Q&A while you have us here.
I saw a lot of hand raising.
Yeah, so did I. Unfortunately, with the webinar thing, you can't.
Can't see
I like
it.
the
No,
regular.
they just have to put it in the chat. So
Okay, guys, put it in the chat so we can answer some of your questions real quick.
and also, like, listen, I know you're gonna have more in-depth questions. Otherwise, just schedule a conversation, right? It's not rushed, because usually what happens, what we found is one question should turn into about 10. It's just the way it is on that portion. So we don't, or maybe you don't want to, talk about your scenario in public, right? Like you just inherited, the Powerball 20, 50, 100 million. You need to place it. We could talk about it on your yacht, where to place your money. No, I'm kidding. So
I see Jackie asked whether you can invest with less than 25,000. No, the minimum investment is 25,000. But if you want, we can jump on a call and see how you can get that together, right? So a lot of people are like, oh, I just don't have it. But when you start to look at where you've got money and think, like funny enough, I've got 3 CDs in my kids' names, right? And so I was thinking about when you're talking about CDs, that must make me old, but we put it together for them for a while ago. But that's a place where I'm losing money by having them sitting there. So I can actually take that money out, but I wouldn't have thought about it if we weren't having the conversation. So we tend to put money in different vehicles and things like that, and you may not know that you can access it. Maybe you've got money in a not a 401k, but a self-directed IRA, or maybe. So what I did a few years ago is I had a 401k through my company, and I decided to take the tax hit and pay the penalty to take it out of there and move it into a tax deferred vehicle, because I felt that taking the penalty in that tax year was better for me than growing it and having to pay the taxes at the end. Right. So that was a personal choice that I made. And I moved it into a self-directed IRA. So, let's jump on a call and see, where you've got money, and maybe we can pool it together to make you hit that threshold. Absolutely. And then I see Josephina's asking, who should I talk to about 1031 exchange?
I just sent her my number. She can call me. Perfect. And I'll get on the phone with her and we can see where she's at, what she needs to be done.
Awesome.
Yeah, just call me later this afternoon. I have a meeting at 2:00, so probably around 4 would be better.
Yep. And so
you're gonna have 20 people call you at 4:00, and I'm gonna laugh my butt off.
They all have my number. I just gave it to Josephina.
Yeah. So Alfred's asking, is there an enrollment period? And so here's the great thing: there is not. So the day you actually sign up, there are obviously forms for the SEC that you do have to fill out. Once we get you past our compliance department, the day you actually wire the money to our account, to the fund, you start earning interest from day one. So I think that's pretty important too. So it's not, hey, in 3 weeks, 4 weeks, as soon as it hits. Also on the, we talked about biannually, you get paid out at the end of February, the end of August. And you'll also see what's happening with the fund, whether it's sales or movement or acquisitions on properties too. So I think that's the other part we didn't.
Yeah, we always send out an investor letter with your check so that you can kind of get a check-in on what we're up to. So.
Yep. So, again, at BPM RIA, I know I see a lot of familiar faces. I'm constantly committed in, your guys' financial success. So, make sure you guys give us a 5-star Google review. You could email me or Alexa on topics, right? Like if you guys say, it'd be great if you guys had a webinar on this. So I might not be the expert on it, because you'll find out I'm not an expert on a lot of things, and I don't pretend to be. But with the RIA, we have a phenomenal community, and we're going to be doing some pretty cool stuff that's coming up, including with bankruptcy attorneys, probate attorneys, some of our corporates, what's happening with different avenues, hard money, alternative financing. But if there's anything that you guys think that, hey, it'd be great if you could touch on this, we're going to go ahead and do that kind of stuff. Tara and I actually kind of talked about on the BPM RIA side was that we were talking about maybe, I don't know, we might do some fun stuff too. Like Taryn kind of does it with our students. If you're in a mentoring program, a talk with Taryn. So, we might do something that we open it up to our whole, network kind of stuff where we'll, I might just want, the easiest way I could say is shooting the shit. I know I shouldn't be using that language, but I don't know how else to say that on, on real estate economics. And again, these are just our opinions, right? So you may agree or disagree, because we constantly get those questions offline about what do you think about this? And one of the things that we're committed also as a team here is to constantly educate ourselves. So we're going, hopefully some of you guys will go to the IMN conference that's coming up next week down at Miami Beach. Like that's pretty fun. And, I'm talking the big hedge fund guys are there. And some of the things that we've done, we go to conferences around the country. And what we've learned, it cracks me up, is that we hear from the people that are really doing it. And then about a year and a half later, I hear it on CNBC, like, well, these guys are going to do this. And I'm like, wow, we already knew that. So it's pretty cool stuff that's been happening.
And that's important, right? Like your network determines your net worth. So having those conversations and being engaged, and, just you taking the time out to jump on a call with us, helps you to start to see where the market's starting to move. We knew about property insurance ages ago. So it's always good to have you guys on and join with us and have these kind of conversations. And I think doing a unstructured, not the shoot the shit, an unstructured call where people can just bring their questions and we can just have a meeting of the minds is always a good time.
Yep, absolutely. So again, I want to look, we're on time a little bit today too. We always run long too on everything.
Perfect.
Any last words? Jason?
Last words?
Yeah.
No, I think it was a good presentation today. I think hopefully we can help everybody, and moving forward and help them get success.
Yeah, absolutely. Tyron, any little last nuggets you want to give?
No, I just gave it. Thanks for joining.
Yeah, and obviously I always got out a mouthful, but hopefully if you're still not sick of us, Thursday at 11, we're going to show you some student deals. I know Alexa was talking about Mario's deal. We might as well highlight Mario's deal, I guess, then, of how we're finding off-market properties for big profits. And so I know I was kind of joking about, I know someone was saying that, hey, they don't have the 25,000 minimum. Well, maybe you should wholesale a deal for 25,000 and you put that money in the fund. We always got solutions here, so I don't even want to hear about that. We're making some big chunks of money too. So the other thing is that really today was about information about alternatives out there. It's not, what we're offering is something different than what you'll see online, whether it's the REITs or syndication, and it's something different. I would say it's kind of like a hybrid. So we kind of touch on a bunch of different pieces, and I don't know anyone else that's kind of really have the same kind of structure that we do. Few and far between if there are. So that's why we're excited about this. And the idea is we keep building the fund. We'll be looking into our own bigger projects, and there will be a chance or a possible chance of having equity interest and being in those projects. And I promise you, the early people that put money in our fund, you guys will be very special to me, and you'll understand down the road. So thank you guys again for hanging out with us Tuesday, and we'll see you Thursday. So make sure you guys schedule a conversation. You guys have more questions, and we'll go ahead and talk to you too. So
absolutely, I'll send you all that link again and a thank you email after this event. Look out for an email from me, alexa@bpmria.com, and we'll see you all Thursday. And there might be a little surprise raffle on Thursday.
Yep, and I did see people that were interested in the quick start this weekend. Make sure you hit up Alexa, because I remember seeing a bunch of people talk about that too. So if you're not sick of me today, Thursday, you get to spend the whole weekend with me, including Taryn and our other speakers, and you'll hear some funny jokes, even though not funny, but it. So thanks again, and we'll see you soon.
Have a great day.
Hi, everybody.
Bye, everybody. Have a great day. All the best.